Hey everybody, how you doing? It's Uncle Bruce here. Good morning to all of you. Welcome to Stock Markets with Bruce for June the 21st, 2021.
Bruce here.
Nice to have you here this morning. Could be a very busy day today and a busy week. Coming off of Friday's 530-point loss on the Dow. And we are looking at an up market this morning. Pre-market is up 208 on the Dow. S&P up 18 and NASDAQ up 35. All the markets are showing higher at the moment. Crude is up 17 cents a barrel to 71.81 a barrel, a little higher. But looks like a good pre-market at this point in time. I guess Asia had a bit of a rough time of it, and then Europe was sort of mixed, but New York is decidedly positive.
Hey, Uncle Bruce, any interesting SoFi news that we should know about? It's been trading kind of sideways recently, so I was curious. SoFi shares will jump about. As I am talking here about everything else, the shares have been as low as 22.22 today. And right now they're at 22.97 within 15 minutes. What do we got? 25 minutes into the market. In 25 minutes, we've gone from 22.82 on the opening down to 22.22. Now we're at 22.98. So, look at the stock. I mean, it's a mover. It is 600,000 shares volume so far at 22.98 now, threatening the $23 mark yet again. My thinking on it, Bloodzar, is in the relative short term, the next 1 to 4 weeks from now, they should be much higher than this. I think 28 to $30 is doable, but that's my opinion. I can't guarantee it, but it's just my opinion. There is no downside to $10 a share on this stock. If this thing drops to 15 or less, I will be yelling at you guys to buy this stuff. I will be yelling and not relenting. Pick this stuff up. But it will go to the 28.30 level, in my opinion. I believe that more buying will keep coming in on this stock now. Now that it is a standalone public company, there it is, 23.02 down 2 cents. It's a standalone public company. It's a banking company. It will be picked up by all kinds of ETFs and all kinds of mutual funds that are into the banking sector, into the finance sector. They're going to buy this stock up. They're going to buy 10,000, 20,000, 50,000, 100,000, 300,000. They're going to nibble up stock and put it away for a long, long time. 23.05 up a penny now. SoFi will be acquired by long-term institutional investors for a long-term hold. That's number one. That's going to take off the street a lot of loose paper. A lot of tradable paper will just evaporate, will disappear. Whatever stock is shorted on SoFi from any outfits out there that don't believe SoFi has a future will be gobbled up by long-term institutional investors, and it's just not for sale. Then on top of that, I believe what will happen is if it is going to be any kind of an increase in the short position on SoFi that is going to become noticed by the Reddit crowd, the Wall Street Bets audience, it will become a meme stock. I believe that SoFi will eventually be known as a meme stock. It'll be highly mentioned on daily blogs, daily commentary, and this community is going to grow and grow and grow. And again, that means, in my opinion, there will become eventually millions of investors that own SoFi shares. And some will own 1 share, some will own 10, some will own 20, 200, 500. There will be a ton of small shareholders on top of the long-term institutional shareholders buying in. Thirdly, I just don't see insiders of SoFi wanting out. I don't think they want out. I think they're going to want to hold what they got, and they're going to want to get more. And I just see the insiders looking at this as a 3-handle stock. This is a $100+ company. Whether it's a year from now, 2 years from now, it doesn't matter. They have jobs with this company. They're not going anywhere. They're going to want to put money into this stock at these introductory prices of $23 a share. This is chump change compared to where it's going. The problem with it is, it's not a problem, but the reality is, it's not known. SoFi is not yet known by probably 90% of the market out there doesn't know who SoFi is. They don't yet get it. They may have heard the term SoFi. They don't know what it means. They don't know that SoFi, the public company, represents an online banking entity that is growing with a ton of new customers every month. By the end of the year, it is estimated that it'll be 3 million customers of this bank, online bank. And that's only the beginning. Within 5 years, it could be 10 to 15 million customers. These guys don't have branches in every small town in America, and they won't. They will not have branches all over your town, county, state, nowhere. You're not going to find any SoFi branches anywhere. It's all online. That means they can run their business from their headquarters and not have all these retail locations like Wells Fargo and Bank of America with hundreds of thousands of employees and all these rents and all these expenses of local branches. They don't have that. They will be a bank that will generate revenue from the juiciest part of the bank business and avoid all the expenses of the bank business, which are retail branch location expenses. They don't have this to worry about. 23.12 on the stock right now, up 8 cents. So that's my comment on SoFi. Pick it up, get your stock, buy contracts on this stuff, buy call options on this stuff, and sit back for a $30 level to start with, and then a 40 and a 50, and thereon and thereon and thereon. We've only just begun. Do you think that the sell-off could be Mr. Sherman selling off his shares? Still a restriction? He could theoretically sell his stock whenever he wants. It's not necessarily that he's going to. It could well be that he is very much in favor of these moves being made by Cohen and his group. He could be a very big fan of this company, and he might sit back and go, hey, I don't need to sell all my stock right now for this cash. He may well sit back a month or two or three and slowly feed stock into the market, if at all. He might just write call options. I mean, he can do that now. He can now write call options against his stock, and he could play the same game you guys are. He could be writing $500 call options for 6 months from now or longer and bring in some serious money without selling his stock. And he could live off his call options for the rest of his life comfortably. I mean, to the tune of millions of dollars, millions and millions and millions. Think about that. Why sell? I mean, if I were his broker, if I were his investment advisor, I'd be talking to him about, well, George, you don't have to sell your stock and get hit up with a big tax bill. Why don't you just offer call options on your stock and pay taxes on that money as you take it in? How about that game? Because you know what they're going to, you know what there's upside with this company and what they want to do with it. Maybe you want to run this thing. And I guess if he does sell a call option, say at $500 a share, and the stock goes, he gets taken out. He gets taken out $500 plus the $50 now, $550 a share. Okay. He's taken out at $550 a share. Or he could buy the calls back and rewrite $800 calls. He's an investor like you are now. Who knows? Is there a magic amount of shares you buy before you have to ask this permission of the SEC? Cohen bought up lots of Gamestop. I had to write up why he was doing it. Once you break 5%, as soon as you get to the 5% mark of ownership, you have to declare your intentions. This is not to the SEC. This is to shareholders through the SEC. You are reporting to the SEC, to the shareholders at large. And you are revealing your hand whether or not you have an interest in buying the company up, whether you are a long-term investor, whether you are looking to invest for a long-term investment into the company. So you reach that 5% level and you reveal your hand. And then a month later, you have to reveal where you're at now. A month later, you're 8.5%, and you say to the market the same thing. I'm interested in a long-term investment in the company. I like the stock. A month later, you've got 10% or more. You're now another level under the SEC rules. You've gone from 5% to a 10% level. Now you're at another level. You now are entering the world of potential restrictions on your stock. You have to notify. You're an insider of the company. You're now a bona fide insider. Even though you're not employed, you're not on the board of directors, you own more than 10%. You are a serious player. You have to keep revealing your intentions. But if you want to go above and beyond that aggressively, you may have to announce to the market how much you really want. Now, in a 30-day window from 9.9%, you could go up to like 17% and then reveal, I went from 9.9 to 17%. My intention is to stop right here and just hold this as a long-term investment. Well, a 17% investor in a GameStop plus 13% Cohen, that's 30% of the company right there. I mean, these two guys aligning themselves together, you only need 21% of the rest of the vote to get over 50% to run the whole show any way you want. That's a serious position. The SEC would like to know what your intentions are. Now, if you want to buy 40% of the company, ultimately you want to have 40%, you may have to put in what's called a tender offer. And where you have to make an offer to all the shareholders out there, and you have to say, look, I got 17% of the company right now. I am prepared to buy another 23% of the company. That'll get me to 40%. And I'm willing to pay $260 a share up to $260 a share to get the remaining 40%. If you want to tender any of your stock to me, I'll give you 30 days, 40 days, whatever it is. It's $260 a share. I'll take up to 40% of the company. Now, what happens if 80% of the company comes in and says, yeah, I'll take 260? Then it's purchased on a pro rata basis. So you might offer 500 shares that you have. They might only take 150 of yours, which is the same for everybody. It might be 30% of what everyone's offering, because that will get this individual to 40%. That could be the deal. On the other hand, the stock could start trading at $280 a share, and no one will tender at 260 because you can get 280 on the open market. And so this investor is stuck at 17 for a while. That could be the deal. These are things that can happen, but I'm not expecting any of this sort of stuff to take place right now. Dumb noob question. If I buy a call option without owning any stock, I end up reselling the call. Next person exercises. Would I owe the shares to the original writer? No. If you don't own any stock, you buy a call contract on let's say SoFi. You buy a call contract on SoFi and it's a $22.50 for January, all right? And the stock goes up and you sell the contract for double what you paid for it. You're out, right? That's the end of your obligation. And the only obligation you had when you owned the contract, when you bought it, was at your choice. You could exercise that contract if you wanted to and demand to be able to buy the stock at $22.50. Or you could sell the contract into the open market like you did and make money on it, or break even on it, or lose money on it, but hopefully make money on it. The only other option you have is do nothing. Nothing. And at the end of the deal, next January, if the stock is under $22.50, your contract has zero value, you lost all your money. You're not going to do that. So you're buying the contract now. You're looking for the stock to go up. You're going to sell the contract and cash the difference. So if you can buy the contract for $250 and you can sell the contract for $350, you made $100 because it's a $250 purchase with a $350 sell price. A $250 contract times 100 shares is $250. So if you buy them at $250 and you sell them at $750, you've tripled your money. You turn $250 into $750. But if you buy 10 of those contracts, 10 of the $250 contracts, you're putting $2,500 on the table, and the shares go up and you sell those calls for $750, you just turned $2,500 into $7,500. Now, $2,500 cash right now will get you just a little over 100 shares of SoFi. Just a little over 100 shares of SoFi. In order for you to triple your money from SoFi stock, it's got to go from $22 to $66 a share. But on a contract buy, on options, the stock doesn't have to go to $66 for you to triple your money. That's the difference here. You can buy a $22.50 call on SoFi and the stock goes up $8-10 a share. You've more than tripled your money on your contracts. That's the leverage factor coming into you all of a sudden. 2,500 turns into 7,500 rather than 2,500 turning into 3,500. There's the difference. You make $1,000 or make $5,000 profit. That's the thing about options, but you got to buy the right ones. You got to go long. You got to have the time for the stock to deliver, because on days like Friday, when we drop 530 points, you can't get caught up in a lousy day like that to wipe you out. On a day like today, when you go up 485 points, it feels better and it sounds better, it looks better, but the reality is SoFi's down 31 cents and the Dow's up 480 points. You still didn't make any money, theoretically, on SoFi, because you're looking at between now and January for SoFi to give you a return, not Friday to Monday to Tuesday. That's the difference. It could well be by the end of this week, SoFi could be at 28 bucks a share. It could be. And you might go, I'm selling now. I'm a happy kid. I love this. I bought these at 2 and they're sitting at 7. I'm out of here. Great. Make your money. Run. Yeah. Roll into something else. Yes, absolutely. Take the money off the table. Wait a couple of days. Watch the market and then jump back in again at the price you like because of the circumstances of the market. Yes. You're in for the long haul. You're going to win. That's the way to go. Yeah. Since a lot of these SPACs are ground floor, should we expect a delayed bounce back? No. Seems the SPAC's action trails or lags the overall market trend, isn't strictly tied to it. AB, the last comment you made right there is the accurate one, the most accurate one. It's just not tied to it. Look at the Dow. It's up 500 right now. SPACs are down. It doesn't matter. The Dow is irrelevant to your SPACs. Most of your SPACs and the companies that used to be SPACs that are now regular companies, they're so new and unknown. They haven't been discovered yet. You guys are super ground floor. You are the first to know. You have a secret at a party that no one else knows. And by the time the party is over, everyone else will have figured it out and they will be buying your stock at way higher levels than you ever paid for them. You just have to let the party happen. Get in now and get your position and sit back and wait. Thank you, everybody, for that. If you'd like to talk to me about a 1-hour session, you want to get together with me, send me an email through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.